Hey, this is Sasha. Thanks for joining me for another episode here on Hungry for Returns, where I answer your trading and investing questions on the stock market based on my own personal successes and failures. So today I have a investing question that's based on option Greeks. So if you're learning about options, that's what this question is all about. Now, if you have a trading and investing question that you want answered, be sure to take a look at our website, tradersfly.com, and submit your own question, and you might get featured on the show. So let's take a listen, and then I'll go ahead and answer the question based on what I think you should know from it. So here we go.
Hi, Sasha. Good evening. I just want to know that how can we get grip on Greeks? So my question is that how can we use all the Greeks and what values we normally use in directional, non-directional trades? And my second question is on wire strategy, which I have heard is very successful strategy, or we can say the Jeep strategy. So what is that and how we need to use that? Thanks in advance.
Okay, so if we go ahead and take a look at, let's just get a grip on the Greeks. Really, to get a grip on the Greeks, it really just comes down to practice. I mean, that's kind of the first thing. But what you need to realize is that the Greeks, you're going to have to separate them into kind of three segments. So that's really what you need to do. You basically have delta. You have gamma, which is kind of related to delta. Then you have theta, and then you have vega. So all of these are your risks. The delta is your price risk. The theta is your time risk. And the vega is your volatility risk. So those are all your risks that you have. Now, it's better to break these things apart into seeing, okay, well, each of your positions is going to have all of these, right? When it comes to an option. Well, if you're, let's say, 300 delta, and let's forget all these, and you're long, well, that means, you have a high exposure on the delta, meaning you want the stock to go up, okay? So just if you think about delta, you want stock up, right? If you have a negative 300 delta, well, in this case, you want basically stock to go down. Okay, if you're, let's just say, let's negate the delta in this case. Let's say you're positive 150 theta, okay? Well, in this case, that means you make $150 a day from time decay. Well, let's say you're negative 135 theta. Well, that means you lose every day that you're holding that option, you lose $135 a day, okay? So you see how this is kind of working is I'm breaking these things apart. Well, let's look at a vega. Well, let's say I'm positive 680 vega. Well, that means when volatility goes up, okay, when volatilities go up by 1 point or 1 percentage point, that means I make $680. Okay, now let's say I was negative 345 vega. Well, that means when volatility goes down, okay, when vols go down 1 percentage point, that means I make 345, okay, because I'm negative or short. Now, it would be opposite if, let's say, volatility goes up. If volatilities go up, I lose, okay? Here, in this case, when volatilities go the other way, let's say volatilities go down, I lose, right? So the same thing here, you have the opposite effect, okay? So let's say stock prices go up when you're short delta, okay? Stock prices go up, well, you lose, okay? Because you're short delta. So it just comes down to practicing these things. If we look at this on the trading screen and platform, I'll show you. So let's say here we are on a calendar. Well, look at my here, delta, theta, and vega. I'm going to skip gamma and rho, obviously, because it's less relevant and less important at this point. Even then, it's such a small number here. But look at the delta right here. Well, I want prices to go up. Well, why? Because I'm right here. So in today's curve, I want prices to go up. I make $24, just price value, right? From price movement, I make that much. Now, from theta, well, it's nice if I just stand still. I make $2 a day here. And volatility, well, it'd be nice if volatility goes up. So it's interesting because I want volatilities to go up in this case, and I want the price to go up. Well, when price goes up, volatility does not go up. When price goes up, volatility goes down. Now, why would this be a little more normal or neutral? It's not a perfectly neutral calendar, but what you typically want, what's a normal directional kind of bet? Well, directionally, what you want is you basically want long delta if you're long a stock. If you're short and you want to go short, well, you want short delta. But this has to relate to your vega. So a typical neutral strategy is, and if you understand neutral, then you'll understand what's a directional, non-directional play, is when you're, let's just say, when you're long volatility, well, you'll probably want to be long delta. How much? Well, it's going to depend on market conditions. It's going to depend on price movement. So let's look at another calendar here. Let me see here if we can put one on around, let's say, 140 level. Well, you can see here I've got a positive 24 vega and I got a positive 13 delta. Well, if I go to the 135, still I'm positive vega because calendars are positive vega. Well, I still have a 7 delta. And why is that? Well, you lean into your pain a little bit. This is more neutral, non-directional. So if you look at 23.79 vega, then you'll want a little bit extra delta because as prices go up, well, that volatility is going to go down. And when volatility goes down, well, that line, the today line, drops. Now, I want to be at the top of that line, and that's why I compensate for it. So if I zoom in here, and you can see this line, well, the curvature is right there at the top. So if we start out here, okay, and we reset all this back to 0, well, that's why I want a little more positivity, because as prices go up in a calendar, I get hurt when prices go up from the volatility side. Now, it works out fine if I set up a position like this from the delta side, but on the volatility side, it's going to hurt me. So this is more neutral on a calendar. Okay, whereas when I take a look at something more like a butterfly, well, a butterfly is short vega. Okay, so take a look at this. So let me spread this out a little bit more for you. So you can see we're short volatility. And if I go more contracts here, let's just say 4 or 5 contracts, you can see I'm short 24 volatility. So what would be more neutral? Well, in this case, I'd want short delta. Okay, now I'm right in the middle. Now in this case, I'm at a 0 delta. That means that when this goes down even further, volatility picks up, which means I get hurt. So it's not as neutral. So instead, I'd want some short delta. How do I get that? Well, I can flip one of the wings and get some delta that way, or I could go ahead and just move it the whole calendar over, let's say 5 points over here, 5 points this way, and 5 points this way. So now I got negative 7.78 delta with my negative 22 vega, because what's going to happen here? As prices go down, what happens to volatility? Well, I'm positive right now on profitability because that curvature is at the peak. But what happens to volatility? Well, volatility may creep up. Well, if it creeps up, well, I lose those little bit of profits that I made, but at least I'm at the peak of that curvature. So what's neutral is really relative to what position you're putting on with the vega. And you compare it to your delta depending on market conditions. How much protection do you want? Typically, you lean into your pain a bit, because here in this situation, as prices go up, volatility is actually going to come down. So as it comes down, that actually helps my my calendar position. So you can see it helps that calendar position as volatility comes down, because prices keep going up, volatility comes down, and it helps me on the volatility side. So what you're really looking at is, what's my biggest Greek? So your biggest Greek, is it the Vega? Is it the Delta? Well, in this case, it's the Vega. So you have to understand that on the Vega side, that this is the one you want to be a little more careful of, and you try to balance that out with a little bit of the Delta. So I hope that makes a little bit more sense. Otherwise, getting a grip on these positions with the Greeks, it's a little difficult. You just have to break it apart a little bit at a time. I would say, rather than doing complicated strategies, look at individual positions. Buy a single, sell a single, buy a single put, sell a single put, then get into verticals. It allows you to kind of worry less about all the factors working together. Instead, you can break those things apart. And as far as which strategy is better than another, really, they're all just strategies. Is a van better than a truck? A van, you can hold more people. A truck, you can haul more lumber. Motorcycle versus convertible. Well, one is safer, one is more fun, one is faster than the other, possibly. It really just depends what you're trying to do and what you're looking at. So successful strategy really just comes down to managing these trades together, depending on the market conditions. So I hope that makes a little more sense. Don't get discouraged. We have a lot of course material on our website, actually, regarding these Greeks. So if you take a look, in fact, we just launched a course not too long ago on the calendars. So all of these videos, they also include the Mastery series, include an hour long on the Greeks bonus videos. So if you're struggling with that, take a look at some of the courses and material there, because there's much more knowledge and insight where we get into practice examples to really get deeper into the Greeks. All right, so thanks so much for joining me. We do have a sale going on right now on the Options Mastery Calendars course, so check it out for another week or so while the sale is on. And don't forget to get on the newsletter list, so that way you get notified as new promotions are released. And you can do that by going below on this video, clicking the link there, or signing up over here on the link on the video as well, or submitting a question if you have one. So thanks for joining me, and I'll see you next time.